Hello everyone, I hope you are well. I am glad that you are at this lesson, and today we continue with further work. So the last lesson is about psychology and how to trade. In today's lesson, we are talking about accumulation, that is the first heel stage of wake of trading, which we have never done on YouTube before. So now we start with the expectation that you will be maximally concentrated and that you will leave the focus on understanding everything that I will talk about in this lesson. We start with the work of accumulation. Therefore, so far we have learned that there are several types of trends and that each trend also contains gradual stops, complete orders, which contain consolidation, in fact, several traces in the market that are observed as candlesticks. That is, candlesticks are more of a manuscript that describes that complete order that we need to analyze. Also, what we have also been learning is that there is a downtrend that contains redistributions within it. We learned that there is a downtrend, an order block, an uptrend that contains an accumulation, therefore a complete order of accumulation, and later a purchase order block sale, which tells us that the order is a block, and we see now right here, in fact, distribution. What we will do in this lesson will be accumulation, therefore the first initial stage of wake of trading. It is learning accumulation where maximum focus is expected, and I hope this lesson will leave a positive impression on you. What exactly does the accumulation scheme look like? So first we will explain the scheme and only then we will do it on a live algorithm and show examples of all that. The accumulation scheme looks like this, therefore, in the course of a complete order of one order block that is not clearly visible on a larger time frame. And that is why we always have to look at a smaller time frame in order to see the traces of smaller order blocks in that fractal part. So when we look at, for example, this lower level here now, if you would enter, since this is a 1 day time frame, if you would enter, for example, on say 1 hour or 15-minute time frame, we would probably see a lot more candlesticks here, and those candlesticks would indicate some new structure. Guess which structure? Most likely a consolidation structure, because we see one black candlestick and one, in this case, a white candlestick that indicates a buy, which means that those two candlesticks are in the same level side by side, and this most likely tells us that there is some kind of consolidation there. With the fact that you have learned so far that consolidation is divided into Wyckoff, complete orders into accumulation, distribution, and so on, it means that consolidation is divided into that. Most likely in this case, we would see what? Accumulation. Why the accumulation in this part? Only this part I necessarily circulated because most likely it is an accumulation with the fact that before that there is a constant sale, then we see an order block, and after that there is a purchase. This tells us that most likely this order block contains accumulation. Of course, we will do the details where we talk about transfers of lower levels, absorbing capital to one place where there is a pool of liquidity that is actually absorbed later from liquidity to volume. And then in that situation, we only have an uptrend. So these are the scenarios that we can say are key to the beginning of learning accumulation. For now, we will first draw several schemes of how the accumulation can look like. So if we were to enter on a smaller time frame or maybe on that same time frame, depending on the fractal size, the accumulation looks like this. First, there is an order block called preliminary support. So preliminary support, accumulation that has yet to be formed. Therefore, that order block is in the form of capital, in the form of money, support for the next complete order that should continue to be formed. Accumulation is the manipulation of lower levels. Therefore, it is the manipulation of lower levels, the transfer of liquidity, and the creation of new capital, a new volume that needs to be further formulated, and then we will explain later why impulsivity arises later, what is the reason and why it is presented that way. When we see in this case here the order block, it will be a preliminary support. Later comes the selling climax, after that secondary test, sign of strength, and then secondary test in phase B, and after that spring. We will also draw another scheme here, which does not necessarily mean that it is always exactly the same. So preliminary support, selling climax, secondary test, sign of strength, and later secondary test in phase B, and then an impulsive uptrend. There can also be an equally impulsive uptrend here. Now we will write down those marks here. So first we will mean the preliminary support, which is the preliminary support for this complete order, which is currently being formed here. Then we will mean selling climax. Selling climax is otherwise sales floor, which happens after preliminary supports, actually conveys that liquidity. And why is it called a selling climax? Because basically, when the redistribution started to form, this would be the lowest level, and hence the name of this order block selling climax. However, in accumulation, there is an even lower level that is later transmitted with the fact that we have now learned that accumulation is the manipulation of lower levels. We see that there is constant liquidity being transferred, but we never see transfers of higher levels. So this higher level was not transferred, right? This higher level is not transferred. This higher level here is the only higher level that was transferred during the form of manipulation of the lower levels. And that is why this part is called the sign of strength, because it is a sign of strength, the secondary test that is in this part here. And the secondary test is like the main rotational point that never conveys the selling climax, but always turns away from it. So exactly as you see the scheme now, the algorithm should look exactly the same. When you follow live algorithm, when you expect something to happen or you follow some current explanations. So here we will mark the sign of strength as a sign of strength that later transmits the previous higher liquidity. And actually, this is the reason for this most impulsive downtrend that you see here, because it is transmitted by, for the first time, higher liquidity. When the previous higher liquidity is transferred, it then tells us that capital is starting to be absorbed precisely at this highest level. When capital starts to be absorbed at this highest level, it means that there will be some investment. When there is an investment, when some currency starts to be sold or bought, depending on whether the currency park that we monitor is mutual or whether it is perhaps a stock market that needs to be sold, and then use that money maybe for some other use in the investment of that company, and then the stock market actually, or that share of that company, can advance detrimental to the advancement of that company, or it may not advance also detrimental to that company. Mostly, companies are always trying to progress and they should always be in the process of accumulation or reaccumulation. And remember one thing, accumulation and reaccumulation, which we haven't done yet and will do, are the only two stoppages after which an impulsive uptrend should arise incompletely on order in the form of a purchase. In distribution and redistribution, only a downtrend occurs, so it is very important to write it down. We continue further, marking the secondary test phase B as the lowest level after the selling climax, and the last one will be spring. Now we will explain these marks, what this actually means. So the preliminary support is the support for the later complete order that arises there. The selling climax is called the selling peak, the selling bottom due to redistribution. But in fact, when it comes to accumulation, it is not. The name remains same. A secondary test is an order block that forms the same fractal size as the previous preliminary support and selling climax. However, when we look at the secondary test, it must have the same fractal size and it must always reach below 80%, or we can say below 20% of this purchase. If we look at this buying from the lowest level to the highest level, then let's say up to 20% of that buying would be somewhere around here. The secondary always has to reach that level. It can be approximately 30%, so it is not fixed, but it must not be more. So the secondary test must not look like this one, way like this, nor must it look like this. It must not convey a selling climax. It must be completely clear. Therefore, it must have a clear fractal size and it must reach the exact place, as otherwise the secondary test is reached according to the rule of the algorithm that we will work on in the making. So this algorithm that we are learning now, everything that we will do next, is based on my success in all the prop firms up to now, and also the personal account of the brokerage house Tuco Annual City. So I hope you are following this with concentration. The sign of strength that arises here. Look at what's interesting, all these order blocks that have existed so far. There was never a multi-level transfer. Here we mark this highest level here. Here was the highest level. Here was also the highest level. So every time a lower level is transferred when it comes to accumulation, a transfer of a lower level of liquidity, a transfer of a lower level of liquidity, and again, a transfer of a lower level of liquidity. However, when we look secondary test, we will see that here for the first time, the sign of strength is happening as a sign of strength, the first transmission of more liquidity. Basically, that strength sign happens for a reason because the secondary test is like an order block in itself full of a complete order. Therefore, it contains a complete order within itself. And therefore, the reason for this strong impulsiveness on both sides contains a complete order, both from the part of the selling climax that starts here with an uptrend, and in the secondary part of the test that happens here and then here later, a strong impulsiveness arises due to a large investment. And why is there a large investment? Because there is a strong volume there. And why is there a strong volume? Because there is a lot of complete orders that are supplied in one place. Capital is collected, and based on that later, this impulsive trend that we see here is created. After this sign trend, higher liquidity is transferred, which tells us the following. It tells us that the transfer of this previous higher liquidity actually means the recollection and absorption of capital, because liquidity is actually an order that does not exist at the moment. What do I want to say? Liquidity is above these higher levels, so it is not within these candlesticks. Speaking of liquidity, look at this. Here is the market. Liquidity is found there, or there, so it is never found in the flow of these traces that already exist here. Liquidity and volume are two different things. So liquidity is like when, for example, you order some sneakers online and now you have paid for those sneakers, but those sneakers still haven't arrived, for example. Or we can say in the following way, imagine this, you order the phone, let's say. That phone should also arrive for you. You only pay when the phone arrives, which means what? You left an order somewhere. You left an order somewhere that the phone should arrive. So you ordered through, let's say you buy an iPhone and you ordered through Apple. You ordered through Apple that phone, it should reach you, and now you have an order there, but you still haven't received the phone, nor have you paid for that phone, but the order exists somewhere. And imagine now when millions of people start ordering, that means when millions of people start ordering, there are orders. And when they calculate those orders, they can amount to, say, 100 million euros, but those 100 million euros still don't exist, nor do those people have phones, so they still need to they arrive, which means that you only pay when that phone arrives, right? Which means that only then is the order confirmed by payment, and then it tells us that at that moment you paid for that phone. Apple makes money, you get a phone, and only when you pay, then liquidity ceases to exist, then volume is created, then money is created that starts to flow, that starts to move. That is real. So the liquidity that is below these levels, these are already some orders from some large companies, institutions who already want to buy, who want already to order, but only when that price is reached. So imagine this now. This will be accumulation, preliminary support, selling climax, secondary test, and secondary test in phase B. Someone wants this moment, maybe when the selling climax is passed in one moment, when the price below the selling climax is reached, let's say this price, someone then wants to buy. Someone will place those limit orders, buy limit, sell limit on MetaTrader or CTrader platform or whatever. They place forward orders. So they leave an order there when that happens, then MetaTrader itself will buy that stock at that moment at that price, which means that there is an order that is not yet real, a volume that is not movable, but the moment the price reaches that part, you then buy the currency, you then bought the currency. So at that moment you made a purchase, and only then does the volume start. And when the volume is created, it will happen there. Why here? It doesn't have to mean where it will happen. So depending on your knowledge of the algorithm, you have to know where the liquidity should turn into volume. And we are doing that analysis now. We are learning that, but it takes a little time. And therefore patience is required to follow more lessons. So you can't know right away. You have to watch the next lesson that I post next, etc. But when we look now at this place where liquidity is transferred, that's when volume is created. And when volume is created, what does it mean? That means the money is real. And when money is real, what does that mean? This means that the company is thriving because she makes money. Imagine now they have a budget of 50 million and suddenly they get money from sales that is the same 50 million. So what will happen at that moment? At that moment, right there, right here, where the liquidity is, where the order is, what will happen then? What do you think? Think for yourself. If they have a total budget in their pocket of 50 million euros right now, at this moment, when this liquidity is reached, they earn from that sale. Now we give the example of a phone. They earn 50 million euros. What will happen? Think about it. Well, the company will progress at that moment. So at that moment, the company is progressing. How? Abruptly, because their budget is increasing from 50 to 100 million euros. And when that happens, what will happen to the action? So the stock must rise then. Why? Because the company has progressed, because it has a bigger budget. In action, what is action? Action is just a manuscript of some progression that already exists. So the action is just someone's handwriting, overwriting the algorithm. This algorithm you see, that's a manuscript. It's like when you learn English and now you start writing. So you are writing someone who is telling you something. So what you write is produced by someone speaking. Or for example, you think, so you write what you think. So it's actually liquidity, absorbing liquidity and tracking volume at a given moment when it starts to turn into liquidity. So when it starts to turn actually into volume, from liquidity to volume. And when we look at that situation, the handwriting of it will be such that that company will prosper. That big company will prosper because of the increase in the budget, and it will happen impulsively. And why impulsively? Because it happens in a very short time. All this work that they had here, that work, let's say, lasted 3 months. For example, their work lasted for 3 months, where they invested in marketing, invested in new machines, invested in new workers, in more skilled workers, in engineers, etc. And then the moment when progress happened, when they made a product based on all that engineering and everything else, they released that product and sold it. They did the marketing, and then at that moment, when the orders are executed, they already know approximately at what moment the progress of the company will happen. They knew that even before, and people like retail traders, like people who they are trading now at this moment, they follow the algorithm and they follow the fundamental analysis so that they can know what will happen at what moment so that later that company can prosper and so that you can invest money there. Because when the progress of the company happens, when you need to make money, it happens much faster. But when they themselves make preparations and prepare the ground for that company's progress, it's a very specific way of thinking where mostly we can say systemic people understand it in a totally different way. System people like security, they like something that brings them that security, secure income, etc. Whereas you look at all these big companies, they don't know what's going to happen. They're doing analysis, but they don't know for sure what's going to happen to their product in the end. Whereas people from the system, they are simply already told legally that they will have a fixed salary at the end of the month, etc. They're happy with it, and that's where the systems people chase security. People do not produce enough imagination into reality, and that is the biggest problem. That's the biggest problem of people who actually progress massively and people who don't. Mostly people who are from the system are angry people, people who are outside the system, who earn more, who are successful and who work less for money. Mostly they are angry because they don't understand how it is possible or they don't like it. No, they know. Is it actually legit, etc.? And then they are more angry and they don't like it. In fact, they are guilty. They are guilty, that is, people from the system, when they are angry at that moment. Why? Because the people who are actually powerful, look, if they're mad at somebody, they're not. So that's exactly the way of thinking that everyone should have an approach when trading the stock market, which is to always implement their actions and progress based on that. Let's move on to the explanation of accumulation. So the accumulation has a schematic representation that looks exactly like this. And now we have already explained what the secondary test in phase B is and what the spring is. Spring is the last order block that can happen in the accumulation, which tells us the following. If another order block happens, which in this case forms a spring, most likely an uptrend should not occur, but a downtrend will occur because there cannot be two springs in one accumulation. So in this part, we see two accumulation schemes that should look like this. Preliminary support as preliminary support, selling climax as selling bottom, selling peak, whatever. A secondary test that generally needs to reach a fully valid fractal, and based on the secondary test, we know that an accumulation is forming. A secondary test is the main pivot point that forms in a complete order. The secondary test is in phase B. How do we know where the selling climax, preliminary support, and secondary test in phase B are located? Based on the secondary test, which is the main pivot point for knowing if Wyckoff actually exists. Based on it and based on its fractal size and clear volume, similar to the volume as in all other order blocks, we can know that preliminary support is actually that first order block because there must always be impulsiveness before it. So the moment we see preliminary support, before it there must be impulsiveness, imbalance, because it is the first order block created after an incomplete order. Move on. Preliminary support as the first order block, the selling climax transmits previously lower liquidity, turns from liquidity into volume. Later is a secondary test that starts to create, let's say, that rejection from the previous volume. So it is not transferred liquid, but the volume of the previous one is reached order block, and then an uptrend occurs again. And after the sign of strength, which is a sign of strength, an impulsive downtrend occurs for this very reason, which in this case forms a secondary test in phase B, which transmits the previously lower liquidity of the selling climax and spring as the last order block. So now we're going to look at the live algorithm and see if that's happening somewhere and how we can analyze it. What we've learned so far, it's all important to write down. I won't repeat it more than once, and that's why I expect that you wrote it down and already knew it, because if I repeat it more than once, then we'll just waste time. Just a minute. Okay, fixes it. I'm here. We can continue to work. Now we will look at any algorithm, regardless of where. We can stop anywhere. It doesn't matter where we will be stopped. Let's say, since this is from 2019, it was quite a long time ago, we can look at a more recent period. For example, let's say it could be this part here. We're going to look at all these lower levels that exist here. Look at these candlesticks here that we see now. These candlesticks, do they have the same fractal? Have got. Why? Because a fractal is volume plus duration. One candlestick has the same volume and time duration because each candlestick lasts around for one day. Look at this candlestick here, this one, and this next one forming. This first candlestick here that happens impulsively. And then at one point it starts to stop. And to create an uptrend again, what will it be called? It will be called preliminary support. Preliminary support through the ego, there is impulsivity. This candlestick that we see here, that will be the selling climax. The next candlestick we see will be a secondary test. After that, automatic reaction. Why is it not a sign of strength but an automatic reaction? Because higher liquidity is not transmitted, it is also rejected. Spring, secondary testing phase B actually, because we don't see the next order block later, which would be spring, but this would be secondary testing phase B. What do we see after that? We see an uptrend, a carryover of the previous higher level. Therefore, a purchase should always occur after secondary testing phase B, impulse selling, order block, as we were taught, and then impulse buying again. So that is what characterizes accumulation. Let's look further. Let's see where we can again establish that there is some kind of accumulation. We can see it here as preliminary support, selling climax, secondary test, secondary testing phase B. In this part, there was a sign of strength and an uptrend. We can look into that further. We will enter on a smaller time frame, let it be 45 minutes, which means that each candlestick lasts 45 minutes. We will look at an even smaller time frame. We will go to, say, 7 minutes, just so we have more opportunity to work through what we want to see in this class. Okay, we can look at this. So what does the scheme look like that we worked on a little while ago, which I came up with? Preliminary support, selling climax, secondary test, secondary testing phase B, and then the uptrend started. Look at this above. Do you see the same? This algorithm here, impulse, preliminary support, selling climax, secondary test, automatic reaction, and secondary testing phase B, after which the uptrend emerges again. So we've seen that now in two cases. Let's look further. What I see so quickly with my eyes, otherwise it could be found much more, only if they did it more slowly, if they had a little, we can say, more adequate time for all that. I want to explain as many details as possible, so I can't right now. A lot to be, I stop. Okay, let's look at this. Let's say preliminary support, selling climax, secondary test, secondary testing phase B, uptrend, spring uptrend. Let's look further. We have to look at where there is an uptrend because accumulation generally happens when an uptrend should happen, and then we can look that way. Let's say we can look at these. Preliminary support, selling climax, secondary test, automatic reaction, secondary testing phase B, and spring. So there is constant manipulation of the lower levels, right? And after that, an uptrend emerges again. It is a description of an accumulation that is constantly being formed. We can look here. Preliminary support, selling climax, secondary test, sign of strength, and secondary testing phase B, followed by an uptrend. So that is the explanation of accumulation that I want to explain to you in this class. So here we have done what is more basic so that it is understandable for every individual. Of course, the lesson will get more and more complicated, so I expect you to stay consistent with the lessons and continue to work at full speed as you have been doing. I wish you all the best and see you in the next lesson. All the best. Greetings.